So let us quickly summarize what we had discussed in LIFO, FIFO and weighted average. When we talked about FIFO, we saw that the COGS or cost of goods sold was $1 and the ending inventory here was $5. In LIFO, we saw that the cost of goods sold was $3 and ending inventory was again $3. In weighted average, we saw that the cost of goods sold was $2 and ending inventory was $4 here. So when we actually compare these three different accounting methods for inventory and COGS, we note that in all these three methods we have different COGS and different ending inventories. So let us look at some general trends as such. We note that the COGS is actually highest in case of LIFO inventory. So COGS is highest in the case of LIFO inventory. However, you'll find that the ending inventory is highest in the case of FIFO inventory valuation methods. However, you will find that the weighted average actually gives a number between these two. So here we have actually assumed that the prices were rising from January to July, July till December, and if this is the trend, if the price is rising, you will note that COGS is highest by LIFO method of accounting and FIFO will give you the highest ending inventory valuation method when the prices are rising. So what happens when the prices are falling? You can expect that this will reverse in total. So please note that under the US GAAP essentially means the generally accepted accounting principles of US. Under this method, all three inventory valuation methods, which is LIFO, FIFO as well as the weighted average, all three are allowed. However, there is an exception when we talk about the IFRS. Under IFRS, LIFO is not allowed. However, FIFO and weighted average is allowed. So the only exception being LIFO here, and LIFO is not allowed under the IFRS. Please remember this, because while you are evaluating European companies or the other set of companies, FIFO and weighted average are the only ones which will be visible. So if you are kind of comparing two companies which are either one of them is based in US and the other one is based in UK, so please do check that they are kind of following the same accounting principles. If not, then you have to kind of do some adjustments. So we'll discuss those adjustments later, but please note IFRS only allows FIFO and weighted average. LIFO is not allowed under IFRS.